So do you keep your money in the bank? Well, if you do, chances are you're getting a little bit concerned. Because lately, more and more people are getting increasingly concerned over these banking issues. We know that the Federal Reserve raising rates, this is not helping. It's actually making it harder on these banks. We know the switch from in-person work to telework. This is actually just exacerbating the commercial mortgage problem. And many understand that pulling your money out of the bank, keeping it in your hand, keeping it in your mattress, sticking it under the cushion in your couch, this is only making matters worse. But then, what other options do we have? Do we really want to go and keep our money in the bank and potentially risk a collapse? No. So that's what we're going to talk about today. What should you do with your money? Now, all I ask is if you can spend just 2 seconds, go ahead, hit that like button, and let's continue. Here's what I can tell you. Right now, there's a lot of issues regarding banking, regarding paying off debt. Should I pay off debt? Should I wait? Should I keep my money in the bank? Should I take it out and keep it with me? What should I do? Well, here's what we're going to talk about today. We're going to address whether your money is safe in a bank, whether it's a savings or a checking account. We're going to talk about what happens to your loans, your active loans, if a bank does collapse. And also, what happens to inactive accounts. And an inactive account is usually an account that's set at zero, but an inactive account can also be one that has money in it that you just have not used or haven't even touched the account for many months. So we're going to address those three things. Now, one thing I just want to say is, and this is another question I get quite a bit, is what if I am planning on getting a loan? And let's say I've already got pre-approved for a home loan and I just haven't closed and the bank collapses. Do I have to start all over again, or do I get the loan somehow? Do I get some of the money? Well, here's the thing. If you are trying to get a loan, whether it's a car or personal, maybe they sent you a credit card that you haven't activated yet, or maybe you're, again, a home. If you haven't finalized the deal, right, it's not a done deal, you don't have it, it is not going to go through, especially if the bank then collapses. Okay, so just keep that in mind. Here's the big question though. Is my money safe? Because why do people keep going to the banks to pull money out? Why? If your money is supposedly safe and it's FDIC insured, then why would you need to go to the bank and pull your money out? Well, let's just answer this question first. Is your money safe in a savings or a checking account? The answer is yes. Your money is safe up to $250,000. Okay? Up to $250,000, your money will be safe. After that, well, that's where you could potentially lose it. Here's what you need to know though. Let's say you have $200,000 in savings and you have $200,000 in checking. Let's say these are both $100,000, right? So you got two. Two in checking, two in savings. Here's the problem. FDIC only insures for single accounts, which means it's owned by you, the same person. You got a savings, you have a checking. Here's the problem. They would take those single accounts, they would push those together. So you got $400,000. The problem is FDIC only insures $250. So you got 100, 200, right? 300, 400. So you'd lose 100. You'd lose the other 50. So you'd have $250,000. That's all FDIC insures. Okay? So your other 150 is gone. Just vanished. That is part of the problem. Now, what if you don't have more than $250,000, right? Well, here's the other thing. Let's say all you have, how much is $600. That's what I got here. And yes, these are fake. I wouldn't rip it up. Anyway, $600 here, okay? Here's what you need to understand. Let's say you only have $600. That's it. And you are worried that if you don't take your $600 out of the bank, you might not be able to go and buy food. You might not be able to go and pay for your utility bills and your Hulu account and your phone bill. you might not be able to put gas in your car if you don't go and get that money out. And you might not have some money to pay for your share of rent, right? And so if you don't go and get that money out, the problem is that when you need that $500 to pay for those expenses, it's not there. Because it takes FDIC a little bit to go and secure your money, to give it back to you, okay, so that you can have access to it. Most cases, it's like 48 hours and you will have access to your money. But if you can't wait 48 hours to go and get that money because you need to eat today, you need to pay for your bills today, you need to put gas in your car today to get to work, well, that's why people are going to take some of their money out, all right? So just keep that in mind. Now, what happens to active loans? Now, this is something that, I had happened to me back in 2008. I believe it was 2008 that this happened. But when you have an active loan, then you're likely making payments to pay back that loan. Now, when a bank collapses, a lot of people think that their loan just goes away. It gets wiped away. Now, essentially, it goes away, but it comes back. Because when a bank collapses, the loans, which are considered assets, these are likely going to be sold off to another financial institution. And at that point, the new financial institution that bought your loans, they will then manage the accounts and they will start accepting payments just like the previous lender did. Okay? Now, the reason I say this happened to me back in 2008 is because I did have an active loan. It was through Washington Mutual, and this loan that I had, I believe I only owed like $80 some on it. Okay, it was a small loan. I think it was for a car or something like that. Well, this loan that I had, I guess it was just so small they didn't really care about it, and so they wiped the whole thing away. They just forgave the loan, the balance of it. And so I got a letter saying that it was forgiven, right? And I didn't have to make any more payments. Great. But that's not usually what happens. And what you need to keep in mind is that just because a bank collapses, it doesn't mean that everything goes to zero. There's still parts of the bank that have value, just like in any other business. And because of that, FDIC is going to conduct a sale, and usually it's going to be sold to the highest bidder. And in some cases, like which was recently done with JP Morgan, is they're going to go through the bank, they're going to pick the assets that they want, the things that they want, and then they will buy those. They don't want the toxic assets. They don't want some of the toxic stuff. They don't want that. But they will take it on if they have to, if this is what is going to lead to the finalization of the sale. So again, just keep that in mind. Now, here's another one, inactive accounts. Well, what do we do with these? Well, in most cases, an inactive account is simply going to be closed. It just gets closed. If your account's sitting at zero, then why would the account matter? There's nothing in it. So if a bank is collapsing, these accounts are just going to be closed. There's $0 in it. They're not going to send you a check. Okay? There's $0 in it, meaning you don't owe any money, right? They just get closed, and no big deal. Now, here's the thing. I actually had an inactive account, had about, I think it was like $2,500, $3,500 sitting in the account. This was back in 2008. Well, what happened was the bank sent me a check for the full amount. Okay? The bank was struggling. Okay? It was a little small bank. Doesn't really matter what the bank was. Anyway, they sent me a check, and I knew something was going on, but I didn't know much. Right? This is something that was new to me, that a bank could just collapse, just fall apart. I didn't know this. Well, the bank, before they actually collapsed, they sent me a check. They sent me a check for the full $2,500 or $3,500 back in 2008. Right? Now, they also sent me an explanation saying that my account hasn't been used for 7 or 8 months, so they were terminating my account. That was it. Now, this account that I set up that had $2,500 or $3,500 still in it, this was actually used initially to pay a auto loan. So this account, I'd put money in it, and then the auto loan would pull money out of this account. and I guess I just overfunded it by $2,500 or $3,500, and so because of that, I don't know if I could have went to go get another loan or what, but they closed that account saying it was inactive. Again, I didn't use it for like 7 or 8 months, maybe even more than that. But just know that if you have money in an account, you will get that money back unless you are over the FDIC insurance limit, which is currently $250,000. But like I said, this is $250,000 per person. If you have an individual account and then you have a business account, that's different. But if you have a savings account and you have a checking account, those two can be combined. And if you have over $250,000, the money that is in excess of $250,000, that actually doesn't count. You will not have insurance on that money. So that's part of the problem. All right. So just wanted to fill you in on this because I know a lot of people are questioning, what should I do? Should I go take my money out of the bank? Should I risk it? Should I stick it in a mattress? Again, I'm not trying to give you financial advice here, but just understand, banks aren't, it's not, unsafe to keep your money in a bank. Just be smart with it. Have some money set aside. Have, a few $1,000s, a few $100s just sitting there that you could use if you need it. If for, let's say, whatever reason, you got to wait 48 hours before the bank, can, or the FDIC can give you your money. So just keep that in mind. That's what a lot of people are doing right now. So again, that's probably what you should do as well. Anyway, that's what we know at this time. Again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.